This is Back Roads of Illinois server to farmers and ranchers in central Illinois and the Midwest. This is Back Roads of Illinois server to farmers and ranchers in central Illinois and the Midwest. We're glad you're here on today for our program. I'm Cesar Delgado on today. On Monday, we talked about the world supply and demand report from USDA. We are talking about the fundamentals with these grains markets, especially in uncertainty for right now with geopolitical and economic issue as well. I am with Donna Huge from StoneX Financial Services. He is going to talk about the fundamentals with these markets for today with us. This is Back Roads of Illinois server to farmers and ranchers in central Illinois and the Midwest. On Monday, we talked about the world supply and demand report from USDA. We are talking about the fundamentals with these grains markets, especially in uncertainty for right now with geopolitical and economic issue as well. I am with Donna Huge from StoneX Financial Services. He is going to talk about the fundamentals with these markets for today with us. Hey Donna, Happy New Year and welcome back to the show.
Happy New Year and glad to be back. Thank you for having me.
Donna, we got the report from Monday for the yields trends for corn, but what is the fundamentals on the corn markets with these yields trends from the report?
Well, going into the report, traders were looking for a decrease to yield, and instead, USDA gave us a half a bushel increase. And with that, it raised our total production. And so that came as a huge surprise to the industry. And with that, we saw a 25-cent decrease in corn prices. Um, Production was increased. They tried to do a little bit of increase to feed and residual use to try to absorb some of that. But with feed and residual use, thinking back on cattle numbers and the decreased herd that we have, that was kind of hard to swallow with an increase to feed usage, but they did it anyway. And so, with that, with all the data, it pressured corn futures heavily. And then, of course, we also had our global numbers, which, when we talk about South America, we're looking to see, good crops down there as well. And so, suffice to say that there's going to be a lot of corn in globally. And so, with that, we saw that decrease in price on Monday. We've been kind of struggling to get back to some sort of higher ground. We did see a little bit of bounce off of those lows, but we could see a range bound and consolidation type trade going forward with corn until we can get some better outlook on where we should be going from here.
What is the concern about this report because the numbers are higher than previously years?
The concern is that we currently have a lot of corn. We've got a lot of producers who have corn in the bin that they haven't sold yet. Um, we're going to start thinking about planted acres here for 26 in not too long of a time. And we've got that South American crop that will be coming into the pipeline. And we've got the second crop safrina corn in South America that's to be planted yet as well. And so producers are thinking about pricing of the 2026 crop. And if things continue in the same direction, there's concern about what pricing may be for 2027.
Of course, it's the planting intention report on March.
Yes, we'll get those numbers in March, and hopefully USDA will be able to give us some good information to go on. And we may see, depending on pricing of these other commodities, we may see some of these corn acres, go to other crops. But I think we're still a little bit early in that decision window, and we still have time to see what happens with our other commodity prices.
Of course. Do you have any questions about the yields back from September report before the government shut down?
I think there's been some talk about concern of the accuracy of the reports just because we had a government shutdown. We've had some USDA personnel that have taken those early furloughs or retirements, and just maybe a little bit of concern about how those numbers were put together and all. So hopefully, if there needs to be a concern in regard to that, we could see it get straightened out as we go forward. But there was a lot of concern, and I don't know if I want to call it disbelief about the number that USDA did put out there. It was a half a bushel higher than what we had previously seen. And anyway, it is what it is, and this is what the trade has to work with. And so we'll go on from there.
What are you watching about the fundamentals on the grains markets for this year on 2026?
Well, as far as the grains go, right now, I'm going to be watching to see if there's going to be any kind of harvesting issues in South America for that crop. We're going to be watching for any kind of extension of drought conditions, what we're experiencing here in the US for the winter wheat crop. We've got a number of areas in the US that currently have some category of drought. And so, the winter wheat crop, if we see that these conditions continue and we get crop progress and conditions reports from USDA going forward that show stress on the KC hard red crop. That'll be a concern as well. But aside from in the US, any kind of planting or growing issues with weather, we should see good crops here in the US. And so, that again will lend back to some pressure on pricing, at least from that aspect.
Wait and see. We can do.
Yes, so we have a
Mm,
good amount of time to wait and
mm.
see on all these issues.
What do you recommend within the premium risk on the cattle markets, Donna?
We've got different strategies that we're recommending to producers depending on their risk tolerance. Certainly, if you want to take it in a, more conservative way, put options would be the way to do it. We do have more aggressive strategies. However, producers will find that, when it comes to the options markets with feeders or live cattle, but especially feeders, because of the volatility that we've experienced over a longer period of time, and in some cases, because of the time that producers have to cover in regard to their protection, some of these put options are very, very expensive. And so, it could be it could be difficult to make that decision to spend those dollars on that type of coverage. We've had producers come to us that have opted for LRP coverage, which is the government program that will give you the same type of protection akin to what you would see for a put option. And so that's a choice that producers can make as well. But certainly, I would say over the past 6 months to a year, protection for livestock feeders in particular has become more costly than what we've seen in years past.
Finally, what are some concerns about the consumer budget? Might it's going to be an economic downturn?
Well, we had talk, about recession not too long ago. However, we continue to see the indices markets, the stock markets, rally higher, make new all-time highs. I know a lot of that is on the AI enthusiasm and tech stocks, but it's for the for mom and pop America. I mean, you have to think back on there are people that are out of work. Budgets are probably tighter because it costs more for groceries. It costs more for a lot of things. Although we have seen decreases in products like gasoline and that sort of thing, but um, so far, the consumer's been able to absorb higher beef prices. They've been enthusiastic about buying up on beef. I think a lot of that lends back to the push for, as far as healthy lifestyle, to include a lot of protein in diets. I think that has been part of the factor in it as well. But it'll be interesting to see what will be the tipping point. And so as long as the producer keeps putting out the cattle, packer keeps producing the product, and consumer keeps buying it at the prices that it's at, I think we'll see things move along as they have been.
Do you have some concerns about recession to come up for a few months?
There's always talk about recession concerns as of late, and if you listen to one side of the room, you can get an argument for it. The other side of the room will be bullish. Look at the stock market. Look at the different economic numbers that we get. So it's. I think as a trader, as a consumer, people need to keep aware of what's going on with these numbers, because obviously, the trends and the reports that we get, I mean, that's going to give us some large ideas about how we should be thinking about the economy going forward.
It's a coin toss.
That it is, and just like anything else, when there's uncertainty, you have to do what you can to protect your interests. And so whether, you're a consumer or you're a producer or even, an end user, the markets have tools, whether you're talking about equities or commodities. There's things out there that you can do to manage your risk. And so, my best advice on any of that would be to keep the information, the good information close. Keep your eyes and ears open and use the risk management tools for the various aspects of your life that you need to. Because, we know that the bad times or the happenings that could create those bad times usually come out of left field when we're not expecting it. And so, if you have your interests protected, then, you're in a better situation.
Of course. Thanks, Donna. I enjoyed our conversation for today.
Thank you for having me, Caesar, and I certainly look forward to being with you again.
This is Donna Huge from StoneX Financial Services. You have a good day.
Thank you, sir. You